Hello everyone. Today we discuss about distinction between financial accounting and cost accounting. Though there is much common ground between financial accounting and cost accounting, and though in fact cost accounting is an outgrowth of financial accounting, yet the emphasis differs. Firstly, financial accounting is more attached with reporting the results of business to persons other than internal management, government, creditors, investors, researchers, etc. Cost accounting is an internal reporting and system for an organization's own management for decision making. Secondly, financial accounting data is historical in nature and its periodical of reporting is much wider. Cost accounting is more concerned with short term planning and its reporting period, much lesser than financial accounting. It is not only deals with historic data but also is futuristic in approach. Thirdly, in financial accounting, the major emphasis in cost classifications is based on the type of transactions, salaries, repairs, insurance, stores, etc. But in cost accounting, the major emphasis is on functions, activities, products, processes, and on internal planning and control and information needs of the organization. Now, utility of cost accounting. A properly installed cost accounting system will help the management the following ways. First, the analysis of profitability of individual products, services, or job. Secondly, the analysis of profitability of different departments of operations. And thirdly, it locates difference between actual results and expected results. The fourth point is it will assist in setting the prices so as to cover cost and generate an acceptable level of profit. The fifth point is cost accounting data generally serves as a base to which the tools and techniques of management accounting can be applied to make it more purposeful and management oriented. The sixth one is the effect on profit of increase or decrease in output or shutdown of a product line or department can be analyzed by adoptions of efficient cost accounting system also. Now, distinction between costing and cost accounting. Costing is the technique and process of ascertaining cost. It tries to find out the cost of doing something, that is, the cost of manufacturing an article, rendering a service, or performing a function. Cost accounting is a broader term in that it tries to determine the cost, though a formal system of accounting, fund like costing, which can be performed even though informal means stated precisely. Cost accounting is a formal mechanism by means of which cost of products and services are uh, ascertained and controlled. The Institute of Cost and Management uh, Accountants UK defines cost accounting as the application of accounting and costing principles, methods and techniques in the ascertainment of cost and the analysis of savings and or excess as as compared with previous experience or with standards. In thus includes three things. First, cost ascertainment, finding out the specific and precise and unit cost of products and services. Cost presentations, reporting cost data to various levels of management with a view to facilitate decision making. The third one, cost control. These consist of estimating cost for productions and activities for the future and keeping them with proper limits. Budgets and standards are employed for this purpose. Cost accounting also aims at cost reductions, that is, achieving a permanent and real reductions in cost by improving the individuals. Cost accountancy is a comprehensive term that implies the application of cost and cost accounting principles also, methods and techniques to the science, arts, and practice of cost control. It seeks to control cost and ascertain the profitability of business operations. Classification of cost in the process of cost accounting. Costs are arranged and rearranged in various classification. In terms, classifications refers to the process of grouping cost according to their common characteristics. The different basis of cost classifications are by nature or elements, that is material, labor and overheads. By time, it's historical and predetermined. By traceability to the product, that is direct and indirect. By association with the product and period. By changes in activity or volume, that is fixed, variable and semi-variable. By function, manufacturing, administrative, selling, research and development, pre-productions. By relationship with the accounting period, that is capital and revenue. By controllability, that is controllable and non-controllable. By analytical decisions making purpose, that is opportunity sunk, differentials joint, common inputted, out of the pocket, marginal, uniform and replacement. By other reasons, that is conversions, traceable, normal, avoidable, unavoidable and total. Now, elements of cost. The elements of cost are the essential part of the cost. There are broadly three elements of cost as explained right now. First, materials. The substance from which the product is made is called materials. It can be direct as well as indirect. Direct materials, it refers to those materials which becomes an integral part of the final product and can be easily traceable to specific physical units. Direct materials thus include all materials specifically purchased for a particular job or process. Components purchased or produced, primary packing materials, that is cartoon, wrapping, cardboarded boxes, etc. And fourth one is material passing from one process to another. Indirect materials, all materials which are used for purpose ancillary to the business and which cannot conveniently by assigned to specific physical units are known as indirect materials. Oils, grass, consumable stores and printing, stationery, material, etc. are a few examples of indirect materials. Labor. In order to convert materials into finished products, human effort is required. Such human effort is known as labor. Labor can be direct as well as indirect. Direct labor. It is defined as the wages to workers who are engaged in the production process and whose time can be conveniently and economically traceable to specific physical units. When a concern does not produce but instead render a service, the term direct labor or wages refer to the cost of wages paid or paid to those who directly carry the service. Wages paid to driver, conductors, etc. of a bus in a transport service. Indirect labor. Labor employed for the purpose of carrying out Task incidental to goods produced or services provided is called indirect labor or indirect wages. In short, wages which cannot be direct identified with a job, process or operations are generally treated as indirect wages. Example of indirect labor are wage or wages of storekeepers, foremen, supervisors, inspectors, internal transport men, etc. Expenses may be direct or indirect. First of all, we discuss about direct expenses. These are expenses which can be directly and conveniently and wholly identifiable with a job, process, or operations. Direct expenses are also known as chargeable expenses or productive expenses. Example of such expenses are cost of special layout, design or drawing, hire of special machinery required for a particular contract, maintenance cost of special tools needed for a contract job, etc. Indirect expenses which cannot be charged to productions directly and which are neither indirect materials nor indirect wages are known as indirect expenses. Example are rent and taxes, insurance, depreciation, repairs, maintenance, power, lighting, and heating, etc. The above elements of cost may be shown as follows. Element of cost: direct and indirect materials, direct, indirect labor, direct, indirect expenses. Overheads. The term overheads includes indirect materials and indirect labor and indirect expenses explained in the preceding paragraphs. Overheads may be incurred in the factory, office, or selling and distributions department, divisions in an undertaking. Thus, overheads may be of three types: factory overheads, office and administrative overheads, and selling and distributions overhead. This classification of overheads may be shown thus. First, classifications of overheads: direct overheads, factory overheads, that is indirect, office overheads, that is indirect overheads, selling of distribution overheads, that is also indirect. Now, cost classification by time. On the basis of time, the computing cost can be classified into historical and predetermined cost. Historical cost, these costs are computed after they are incurred. Such costs are available only after the production of a particular things is over. Predetermined cost. These costs are computed in advance of productions on the basis of a specifications of all factors influencing cost. Such cost may be estimated cost are based on a lot of guesswork. They try to ascertain what the cost will be based on certain factors. They are less accurate as only past experiences is taken into account primarily while computing them. The second one is standard cost. Standard cost is a predetermined cost based on a technical estimate for material, labor, and other expenses for a selected period of time and for a prescribed set of working conditions. It is more specific in nature and the object is to find out what the cost should be. Now, cost classification by traceability. As explained previously, costs which can be easily traceable to a product are called direct cost. Indirect cost cannot be traced to a product or activity. They are common to several products. Salary of a factory manager, supervisor, etc. They have to appointed to different products or some suitable basis. Indirect costs are also called overheads. Now, cost classification by association with product. Cost can also be classified on the basis of their association with products as product cost and period cost. Now, product cost. Product cost are traceable to the product and include direct materials, direct labor, and manufacturing overheads. In other words, product cost is equivalent to factory cost. Period cost. Period costs are charged to the period in which they are incurred and are treated as expenses. They are incurred on the basis of time, rent, salaries, insurance, etc. They cannot be direct assigned to a product as they are incurred for several products at a time generally. Now, cost classifications by activity or volume. Costs are also classified into fixed, variable, and semi-variable on the basis of variability of cost in the volume of productions. Fixed cost. Fixed cost is a cost which tends to be unaffected by variations in volume of output. Fixed cost mainly depends on the passages of time and does not vary directly with the volume of output. It is also called period cost. Rent, insurance, depreciation of building, etc. It must be noted here that fixed costs remain fixed up to a certain level only. These costs also vary after a certain productions level. Now, semi-variable cost. These costs are partly fixed and partly variable because of these variable elements they fluctuate with volume and but because of the fixed elements they do not change in direct proportions to output. Semi-variables or semi-fixed cost change in the same direction as that of the output but not in the same proportions. For example, the expenditure on maintenance is to a great extent fixed if the output does not change significantly. Where, however, the production rises beyond a certain limit, further expenditure on maintenance will be necessary, although the increase in the expenditure will not be in proportions to the rise in output. Other examples in this regard are depreciation, telephone rent, repairs, etc. Now, variable cost which tends to vary directly with volume of output is called variable cost. It is a direct cost. It includes direct materials, direct labor, direct expenses, etc. It should be noted here that the variable cost per unit is constant but the total cost changed corresponding to the levels of output. It is always expressed in terms of unit, not in terms of time. Now, cost classifications by functions. On the basis of the functions carried out in a manufacturing concern, cost can be classified into four categories. Manufacturing production cost, it is the cost of operating the manufacturing division of an enterprise. It is defined as the cost of sequence of operations which began with supplying materials and services and ends with the primary packing of the product. Administrative office cost, it is the cost of formulating the policy, directing the organizations and controlling the operations of an undertaking, which is not directly related to production, selling, distribution, research, or development. Administration cost thus includes all office expenses, remuneration paid to manager, directors, legal expenses, depreciation of the office premises, etc. Selling cost. Selling cost is the cost of seeking to create and stimulate demand. Advertisement, showroom expenses, sales promotion expenses, discounts to distributors, free repair and servicing expenses, etc. Distribution cost, it is the cost of sequence of operations which begins with making the packed product available for dispatch and ends with making the reconditioned reconditions returned empty packages, if any, available for reuse. Thus, distribution cost includes all those expenses concerned with dispatching and delivering finished products to customers. Warehouse rent, depreciation of delivery vehicles, special packing, loading expenses, carriage outward, salaries of dispatch clerks, repairing of empties for reuse, etc. Research and development cost. It is the cost of discovering new ideas, processes, and products by experiment and implementing such results on a commercial basis. Reproduction cost. Expenses incurred before a factory is started and expenses involved in introducing a new product are reproduction cost. They are treated as deferred revenue, expenditure, and charged to the cost of future productions on some suitable basis. Now, cost classification by relationship with controllability. On the basis of controllability, cost can be classified as controllable and uncontrollable. Controllable cost, a cost which can be influenced by the action of a specified member of an undertaking, is a controlling cost. Direct materials, direct labor, etc. Uncontrollable cost, a cost which cannot be influenced by the action of a specified member of an undertaking, is an uncontrollable cost. Rent, rates, taxes, salaries, insurance, etc. The term controllable cost is often used in relation to variable cost, and the term uncontrollable cost in relation to fixed cost. It should be noted here that a controllable cost can be controlled by a person at a given organization level only. Sometimes two or more individuals may be involved in controlling such a cost. Cost classifications by decision making purpose. Cost may be classified on the basis of decision making purposes for which they are put to use in the following ways that I described right now. Opportunity cost. Opportunity cost, it is the value of the benefit sacrificed in favor of choosing a particular alternatives of or an actions. It is the cost of the best alternative foregone. If an owned building, for example, is proposed to be used for a new project, the likely revenue which the building could fetch when rented out is the opportunity cost which should be considered while evaluating the profitability of the project. Now, sunk cost, a cost which was incurred or sunk in the past and is not relevant for decision making, is a sunk cost. It is only historical in nature and is irrelevant for decision making. It may also be defined as the difference between the purchase price of an asset and its salvage value. Differential cost. The difference in total cost between two alternatives is called as differential cost. In case the choice of an alternative results in increase in total cost, such increase is in cost is called incremental cost. If the choice results in decrease in total cost, the resulting decrease is known as decremental cost. Now, joint cost. Whenever two or more products are produced out of one and the saw materials or same raw materials or process, the cost of materials purchased and the processing are called joint cost. Technically speaking, joint cost is that cost which is common to the processing of joint products or byproducts up to the joint of split off or separations. Common cost. Common cost is a cost which is incurred for more than one product, job, territory, or any product, any other specific costing objectives. It cannot be treated to individual products and hence uh, apportioned or some suitable basis. Imputed cost. This type of cost is neither spent nor recorded in the books of account. These costs are not actually incurred, hence known as hypothetical, hypothetical or notional cost, but are considered while making a decision. For example, in accounting, interest and rent are recognized only as expenditure when they are actually paid, but in costing, they are charged on a notional basis while asserting the cost of a product. Out of pocket cost, it is the cost which involves current or future expenditure outlay based on managerial decisions. For example, a company has its own tracks or trucks for transporting goods from one place to another. It seeks to replace these by employing public carriers of goods. While making this decision, management can ignore depreciation but not the out of pocket cost in the present situation, that is fuel, salary to driver and maintenance paid in cash. Marginal cost, it is aggregate of variable cost, that is prime cost plus variable overheads. And replacement cost, it is cost of replacing a material or asset in the current market. Now that's the end of the video, my friends. In the next episode, I will discuss about marginal cost. So if you like my blogs, please subscribe, share my channel. And thanks for watching my videos.